Hey, Franchise Secrets, it's me again in another solo episode. Reason I'm doing a couple solos in a row is I've been on quite a few podcasts lately, had some great questions. My friend Matthew, he's a franchise consultant. I was on his podcast and he asked me, like, what were some of the things that you did to level up the management in place to level up? So going from working in my business, like being full-time, 60 hours a week in my business, to today being fully passive. And when I say fully passive, I devote about 30 minutes a week to review and to make sure things are on track. So I'm going to talk about the things that I've done to level up in different franchise organizations that I've been a part of, mistakes I've made, things I've learned, and how I did it. So let's just jump right into it.
Representing Franchise Secrets, Erik Van Horn.
I first started in Liberty Tax, and that is a seasonal business. This was over 20 years ago. Very seasonal business. Started out multiple locations from day one, out of state, moved out there, moved to Austin, Texas eventually, and continued to grow that business as an area developer or regional developer / master franchisee. And I had my own locations. So I'm really going to talk in this business about the mistakes and the things that I learned early on working so many hours and hiring good people. What I really learned here is you need to scale at a certain rate to be able to make the right hires. And I didn't do that, and I didn't do it correctly many times as I was growing that business. The area development side of it was amazing and did very well with that because it wasn't so management intensive. It was a different type of scale. So focusing on the franchisee side of things, I was taking over distressed units, and I needed to fix past mistakes that owners had made and inheriting employees that they were part of the problem, that those locations weren't doing very well. So I inherited the wrong people. I made hiring mistakes, meaning I did not hire good enough people. I didn't hire people that were better than me. And I really couldn't at that time. So that's why it was me. So I grew too fast in that business. I didn't or wasn't able to hire the right people. I remember one time, I got a phone call from a new employee in one of my locations, and they said, your manager was just taken by the police. And I won't get into the details, but it was the last time that I ever saw that particular manager. They were gone, and my eyes were open. And I'm like, okay, now I'm out of a manager, which is really a good thing because they shouldn't have been there in the first place. So the police coming to take them away was the best thing that happened to me. But I needed to get somebody else in place there. And I had other locations that needed people that needed to be in the right seats. I went all year without making really good hires, and it's because I didn't have enough money to be able to make the good hires. And I was always behind the eight ball. I was always chasing the fires versus making really good decisions. So looking back, I grew too fast. I didn't grow fast enough to be able to have enough revenue coming in to have enough net profit to be able to make the great hires. It just was a perfect storm the wrong way. So I learned if you're not at scale, you're going to have a hard time finding the A players. And that was a brutal time. Even though I wanted to have these A players, I couldn't do it for a lot of different reasons. So I changed the way that I did things. Businesses that I looked at, I wanted to be able to scale, grow fast enough to be able to bring on the right people, the right seats, so they could scale that with me. And they were better and smarter than me. They could execute better in their zone of genius. So that was probably the first 7-8 years of franchising was on the franchisee side was tough that way. Area development side, very different story. That was right in my zone of genius. And so that was a different story where we had 40 plus locations in that Austin market and sold that. But that's what I learned there. Didn't scale fast enough. Another one that I went to after I'd sold out of Liberty was an area development that I bought. And so there were 3 of us partners in this particular area development. And it was in a large metro area, very large metro area. And so as an area developer or regional developer or master, you buy a region, and we basically, had that Southern California region. And the goal was to find franchisees, put franchisees in there, help those franchisees be successful. And that's what we did. We bought a large region. We all had franchising experience. One of the area developers lived in that local market, so they could be a little bit more hands-on, but that really wasn't their goal. They didn't want to be hands-on, and that was clear from the beginning. But when we needed it, it was good. So what we also realized is we were doing well, but we didn't have enough credibility in that particular industry. So we had a conversation with the top franchisee, basically the top franchisee in that whole state happened to be in our area, which was not by total mistake, because we had learned as you're going to be an area developer or regional developer, you want to have a top franchisee, somebody that's doing very well, that's expanding, that's growing, that has a lot of revenue and profitable, very profitable. We had that in that area development. So it wasn't luck, definitely wasn't a mistake, but it's something that I'd learned from a mistake in the past as we'd grown. So we went knocking on their door and said, hey, what about coming in as a partner with us? And they came in as a partner with us after, a lot of negotiation and whatnot. But what I learned is having a local successful franchisee as a partner greatly reduced the time that I spent in the business, boosted our credibility, because we could say things over and over and over based off our experience in franchising and in business, but we didn't have that industry experience. And they were always saying, you don't understand this, you don't understand that. And there's an element of truth. There are certain things that we don't understand, and there's that element of truth, but they weren't taking all of these other things that we knew how to do. The other franchisees in the market were not giving us enough weight to be able to make changes in their business to have an impact that would, increase their revenue and ultimately profitability. So I spent a lot less time in that business, a lot more credibility, because they had the experience and they could operate. So that was a big thing, and that experience of seeing somebody that knew what to do in that particular industry and they'd done it before, that just it just made my life so much easier. Attention, franchisors and franchisees, there are 2 really important resources that I want to share with you that will help you avoid costly mistakes and increase your enterprise value. The first is our free Facebook group. It's a community that has over 4,000 franchisees and franchisors in it. When somebody asks a question, they get honest and authentic answers from multiple perspectives. You can join the group for free over at franchisesecrets.com/Facebook. The second resource I want to share with you is if you're a franchisor and you're frustrated that you're not awarding as many franchises as you thought you would, this is the reason I created the Franchisor Mastermind. If you want access to the information, the techniques that the best franchise sales organizations are using to award franchises, and you want what mature brands have with their playbook of having happy, successful franchisees that grow the right way, then you might want to check out the Franchisor Mastermind. The reason why people join is they want access to my Rolodex, my connections. They want the playbook to achieve both short-term and long-term success. They want to increase enterprise value in their brand. Links will be in the show notes or at scalablefranchise.com. So fast forward, and I'll give you the brand of this one because I talk about it fairly often, is Solo Salon Studios. 4 of us business partners bought the entire rights to the Orange County market. And we knew that we wanted to be more hands-off. One of the partners had already retired. We pulled him out of retirement because he was young. He was like in his 30s. We all were at that time. We pulled him out of retirement and said, hey, you don't want to retire. You want to build this thing with us. And he's like, yep, I'm in. And there was 2 other guys that we all came from the first franchise, Liberty. We all had success. We all wanted to grow something bigger. And we had a good operating agreement that spelled out our duties. And so we went into it. We bought the rights to the Orange County market, and we knew that we didn't want to be hands-on. But we didn't have anything open to be hands-on. So we looked at our past mistakes. What did we do wrong in the past, and what are we going to change moving forward? Some of them were a lot more operational than I was, and so they had made some really good hires and had larger, more successful Liberty Tax franchises than I had. And so we learned from the things that they did right, things that they did wrong. We did that for all of us. We knew going into that, we needed to open up 3 locations back to back. I mean, signing 3 leases, LOIs to the lease, to grand openings, we knew is going to be fast and furious. We also knew, we felt confident in this brand because they had history, even though we didn't personally know anybody in that brand. And they were still early on. If you look back, anytime you think you get into a brand and it's fairly saturated, it is established, and you look back, you're like, holy cow, that was early. And, no mistake, Sola, we got into that early on as well. And then we knew we needed to get 3 locations open up quickly. Set the stage. First location did average. Second location was a dog, and third location was a unicorn. But we didn't know that going into it. And I see this often with business owners going into different markets. You don't know what one is going to be a unicorn, which one might be a dog, and most of them are going to be average. So we knew that's the way it might play out. And looking back, we're really glad that we did that. And the reason that we did that, not because we're smart, because we thought the third one was going to be a unicorn, we did it because we knew we had to get 3 locations open up to be able to hire a district operational manager to do things for us, because we didn't want to do the things on location 4 through 12. So we opened up the first location, and we're like, we got a great person. They come from the hair care industry. They're young, they're hungry. They're going to do great. And we hired that person, and they were just a disaster. They couldn't manage people. They couldn't make really good decisions. They didn't know numbers. They didn't know banking. They didn't know real estate. They didn't know all of these things that we really needed help with. They knew the hair care industry, but Sola Salons really isn't in the hair care industry. It's more of the real estate industry, because you're leasing up these salon suites. So we let that person go. We hired somebody else that we thought would be really good, and they ended up being a mess as well. And then we're like, okay, let's go back to the drawing board. Who do we need? What do they need to do? And what industries might they be coming from? Because there's nobody in the salon suite industry that had experience, because it was such a new industry. So what we realized after, reflection, talking to franchisees, really understanding what business we're in versus what business we think we're in the real estate business. We were in the property management business. So we put out, the job postings and looking for the right person. And we had a number of people that raised their hands, went through a full interview process. It took a couple months, because we were going to get somebody that was with us for the long haul, and ended up having a couple, dinners with them and their families, the final candidates, and landed on the guy that came from real estate investment, portfolio management, real estate leasing, and we worked for somebody doing all that. And he was like wanting to do something more. So we were a smaller company, but we're going to give him a lot of responsibility and a lot of room for growth. So we hired him, and it was the best thing that we ever did. Because all of a sudden, where we used to be involved in all the lease negotiations and finding the locations, dealing with the leasing agents, dealing with the bankers, and it's everything that goes into it, he did everything. He would help us. He was more organized than any of us. He had better leadership qualities than anybody else we'd ever had. He was really good at making decisions, and we didn't just give it all to him right away. We would give him a little bit. He would prove himself. We would give him more. We're like, this guy can make good decisions. This guy can lead. This guy knows who to hire, who to fire, when to do it, how to do it. performance reviews, dealing with high-level conversations with millions of dollars on the line with bankers, and then at the same time be able to have conversations with our tenants, the people that were paying $300-$400 a week to lease from us. So he turned out to be amazing. So mistakes, we hired the wrong people trying to get an A player. And so moving forward, like, we're not going to do that anymore. We learned we need to pay market rate for the right type of person, for their experience. We need to spend time training them, and then they can run, and they can have that organization be a well-oiled machine. And that is what happened at Sola. We sold that business for more money because we were out of the weeds of that business. We were not managing that day to day. He was, and so we were able to sell that for a lot of money. Now, kind of moving forward, lessons that I've learned from the first one, the second one, Sola, to where probably the most passive franchise that I've ever owned. So I'm going to call this one my passive investor franchise. Now, to set the stage, I don't think any franchisor that I've been able to see yet or understand, or get really behind the scenes and to look how long they've been able to produce fully passive investor franchisees. I've not seen that model work. So I'm not talking about a model here. I mean, I'm talking about a brand. I'm talking about a model of investing into franchises. So it may not be a passive franchise organization, or even a semi-absentee franchise organization. It might be owner-operator. And I tend to think, and this is probably against what a lot of these franchise organizations really think about when they try to attract passive investing franchisees. I look for brands that I want franchisees to be very active in that business. If I'm going to be the passive investor, I want my partners to be active in that business. I don't want them to have the same mindset that I have in that, at least initially. Maybe once we grow and we're making a lot of money, they can move to a different role, and that's discussed in the beginning. So my definition of passive investor model franchising is I'll spend 30 minutes a week on a conference call, whether it's live or recorded, and I can just look at my investment, to keep an eye on my investment, to make sure things are moving forward in the way that they should be moving forward. I will get involved if they need help making a big decision, or they are starting to make wrong decisions, then I will say something. But my job, 30 minutes a week, keep an eye on it. I put money in and I get money out. I don't want to have to put in more money for unexpected capital calls. Like, that's not good. And that would be a partnership that is not expected. That would not be a successful passive investing franchise for me. So just to be clear, I've not experienced full passive investing franchises yet, but I do know the model that works with me. And that's really finding a proven franchisee in a system that's already up and going. They have great leadership. They are active in the business, and they have skin in the game. So let me unpack that a little bit. Experienced franchisee, not just a franchisee in any franchise, but a franchisee in the particular brand that has made money, and the franchisor really likes them, and they are successful. They just want to grow at a faster rate, and that's where somebody like me comes in. I want them to be active in the business. If here's a real life example, one of the sales teams wasn't performing as they should. I didn't even know it, but a partner got on a plane, flew down to meet them, changed some things up, fired some people, made some new hires to get the thing back on track. And it's not like it was doing bad, but it wasn't up to our standard. We want quick profitability. We want large revenue. So other franchisees would have been happy with that. He wasn't. I'm happy with that. He went out there and took care of it. That's great leadership. That's being active in the business. His money is on the line, so he's going to do it. firing people that aren't performing. Like, that's a big thing. People need to get, if they're not performing, if they're not selling, if they just want to sit behind a desk when they need to be on the phone, reaching out, marketing and selling, too many people are afraid to let go of that person, especially in this environment where we're in, where good employees are hard to find. Well, that's not a good employee if they're like that. Mistakes in this one, none yet. Now, I'm fully expecting mistakes to be made. We just haven't had any yet. We've been doing it for a while. We have locations that are about ready to open, and we are way ahead of schedule on where we are with revenue, projected profitability, etc. So no mistakes yet. But again, I'm not going into this blind thinking we're not going to make any mistakes and everything's going to be a unicorn, because going back to Sola, I know that we will have some locations that are slower starts. They're not all going to be a unicorn. The one that I'm talking about now is probably a unicorn from a location standpoint and maybe some other things, but also it's because of the leadership involved. So what I really have learned about that passive investor model in franchising, it is not, I repeat, it is not the brand. It's the people, the right partner in the right seat, them hiring the right people, put them in the right seats, having the right expectations as a partnership group, meaning how does it work? Are we all equal partners? And this is the way I like it. We're all equal partners, putting in the same money and getting the same money out, and yet there's compensation involved outside of that would be involved for the effort and time that they're putting into the business. So they're compensated, they're paid for that, but not in terms of ownership or equity. That may not work for everybody, but it's like the cash flow quadrant. If you looked at the cash flow quadrant with Robert Kiyosaki, you start out as an employee, and then you go through the different quadrants, and then you end up as an investor. That's the goal for most people in business. They start out as an employee, then they're self-employed, then they're the business owner, and then they're the investor. That's how my journey's been in franchising. Just like that cash flow quadrant, I was active, working 50, 60, 80 hours a week at times in the business. And now today, 20 plus years later, I have opportunities to be just the pure investor. Again, my definition of investor may be the same as yours, may not be the same, but I found that is probably the best way to get a return on my money, is having some active businesses where I'm really not active in them. I'm the investor, kind of like an angel investor without all the risk, because I've de-risked so many things. So that's what I've got for you today. I hope this helps make some sense. I figured I'd give you some real life examples in 4 different franchises, different industries, different parts of the country, and different stages of my franchising career. So hope you found it helpful. Next week, I'll be back with some guests and kind of get back to the regular program. But with these good questions that I had from some of these podcasts that I've been on, I thought it'd be helpful to share some of that with you. Thanks for listening to the Franchise Secrets podcast. Links to everything can be found over at franchisesecrets.com. And if you want my help with anything from starting your own franchise to growing your current franchise business, please visit scalablefranchise.com.